Bitcoin is challenging all-time highs once again, but I am actually going short today. We are currently at a price of $123,922. Bitcoin is just a few dollars away from the all-time high at 124,371. I am actually going short right now. Now there's a couple of different reasons for this. This is definitely a high risk strategy, right? I'm not looking to exit the market in terms of selling out of my long-term positions, but I do see a short-term opportunity here, and that is for a number of different reasons. So I am short currently from $124,087. As you can see here, this trade is on fairly high leverage, right? 20x. I'm using leverage in this case to manage the risk of this. You can see we're currently up $221 on this trade. I am targeting around $110,000 for the initial move of this trade, but I am willing to scale in and scale out of this position as well. So we actually got into this from a limit order, as I said, up at 124,087. And the main reason that I think there's a chance that this position could play out is because, as always, of the liquidations, right? So if we take a look at the liquidation map, down at 122,700, there are $200 million worth of cumulative long liquidation risk, and that's on the one-day time frame as well. This number jacks up as we go further and further down, right? Down at $120,000, that liquidation risk goes to $640 million. But the key thing to look at on this map is the imbalance, right? So this is essentially showing us that there are a lot more leverage longs in the market than there are leverage shorts in the market. And that's essentially my thesis for why this could play out. Now, we've seen similar things happen before, right? Like the last time we challenged all-time highs a couple of weeks ago. You can see we popped up just a little bit above that high, and then we're pretty immediately slammed down. And essentially why this happens is stupid money gets overly excited at these all-time highs. They pile in on leverage. They're piling in with money that they don't have. When those positions become liquidated, or they choose to leave those positions, it puts an imbalance of sell pressure on the market. Now, I've also drawn on a volume profile here from the local bottom from the 7th of April. That is down at $74,500. And you can see that essentially the node that you would call this, right, a high volume node on the volume profile, is all the way down here at $104,650. Now this is imbalanced to the top, right, because we've been trading in this range. This essentially means that more volume has been transacted up here than down here. Generally speaking, the way a volume profile is used in this way to make predictions in the market, I don't like to say predictions exactly, but the way we use this is that price tends to move quickly through low volume areas and faster through high volume areas. But the volume node, as we call this is the average price where the most volume has been done or the most buys and sells have occurred over this fixed range, right, or this fixed time period. Price tends to magnetize towards that. Also, if you're looking here on the daily charts, right, we've moved up pretty much in a straight line from the lows. And ironically, this move was also precipitated by the same leverage forces that I'm kind of playing on for the thesis for the short trade, right? This was people getting shorts near the bottom, panicking, thinking we're going to break this low. And then a small price movement to the upside causes an imbalance, in this case, of buying pressure in the market as they are forced out of those positions. In this case, I'm playing the opposite of that. This is a high risk play, right? I'm using leverage. I'm using a small portion of the overall portfolio to act out this thesis, right? And yeah, I mean, we could get absolutely wrecked, right? We might get smoked on this trade. I won't sugarcoat it. But the way I see it right now, with the imbalance in leverage in the market, a lot of people are long right now, a lot of people are leveraged long right now, and they could very well be forced out of their positions, which wouldn't be a good time for them, but it would be a good time for us. Like I say, we are in this short position, currently up $150. Main target for this, $110,000. We could go even lower than that. I'll probably take some profits out before then. We are in with 20x leverage, filled 0.8 BTC, entry price 124,087. and I'm targeting 110K. So with full position size, that would be a profit of $11,269. Stop loss, right? I'm looking up here. We might extend this a little bit. I'm not actually trading with a stop loss right now. Like I say, the way I was kind of expecting this to go, and I did have more sell orders higher up the book, was a break of highs and then a move back down if momentum wasn't continued on that break. But we're calling the sort of soft stop loss around 130K. Might let it go a little bit further than that, depending on how that move happens, right? But 130K, sorry, that's the wrong side. So 124,000 is the entry, and say we got stopped at 130K with a 0.8 BTC position size, 20x leverage. That would represent a loss of about 5K. It's large compared to the account size, about 13K right now, but it is not large compared to the overall portfolio size, right? So I'm not risking the house on this one. But there it is, $122 in profit. This move is definitely slowing down, and as I've just spoken about, look at the imbalance of liquidity leverage that we have in the market right now. That's all I've got for you. As always, not financial advice. Nothing I say should be considered financial advice. This is just my opinion shared with you for entertainment only. Thanks so much for listening. Plenty more to come. Catch you in the next one.